Good morning, everyone. Welcome to today's webinar, Business Opportunities in Mexico. I'm Joyce, the MC of today's webinar. We are honored to have three speakers today to present. First, we have Ms. Charlotte, the economist of HKTDC research team. Following, we have Ms. Susana from the Mexican Chamber of Commerce, speaking on the Mexico's trade and investment outlook. Also, we will have Ms. Luz from CWCPA to share the real case study. We're a manufacturing company incorporated an office in Tijuana. Before we start, I'd like to invite Mr. Thomas Wong, partner of CWCPA, to give a welcome remark. Mr. Wong, please.
Thanks a lot. Good morning to you all, and thanks a lot for TDC for inviting me to make an introductory remarks. First of all, my name is Thomas Wong. I'm a certified public accountant in Hong Kong, the only CPA firm in Hong Kong doing business with Latin America. I have three Mexicans, two Colombians, two Brazilians, and one Spanish, working in my CPA firm. And I've been doing business with Latin America for over 15 years. And what drives me, to do business with Latin America is basically of one common value that we Chinese have with them is family values. The Latin American people, they treasure family a lot, and also we Chinese, of course, treasure family a lot. It is because of this common bonding that brings me, very closely with Latin America. And I have witnessed, in the last 2 years particularly, that there is a shift in paradigm, in doing business with Latin America, that I gradually see that some productions, in mainland China are shifting to Mexico of Latin America. So today I would like to, as an introductory remark, before when I introduce all of you to the speakers, I would make a general comment on the economy of Mexico and why it is so important to Hong Kong now and also so important to China. First of all, regarding Mexico with Hong Kong, Mexico actually is Hong Kong's largest trading partner in Latin America. I just want to give you this very brief comment from a CPA. And then I want all of you, if you want to have some statistics, please look for Trade Development Council. Hong Kong Trade Development Council actually has your office in Mexico as well, and they can provide you, with contacts in Mexico. And if you are interested to do business in Mexico, apart from they can give you statistics, they can link you, to the correct connection. And also, right now, Mexico is a very important market for China. I can see that, China is increasing a lot of also business from trading with Latin America, especially with Mexico. In the last few months, I've seen a very big production company called Foxconn. They have already set up 5 factories in Mexico because, of the global economic challenge. We all know that. So therefore, Chinese businessmen or even some businessmen in China where they have factories, they are very smart and then they are very agile. They move their production base also to Mexico. For me, me as a CPA now, I'm handling actually also one case of a very big listed company in China. They also want to open 2 factories in Mexico, one in Tijuana and also one in Suarez, the northern part of Mexico. But I don't want to go into too much details of this. Afterwards, my colleagues will give you and share with you this practical example, how we can, or how TDC, Hong Kong Trade Development Council, or how Mexican Chamber of Commerce in Hong Kong can help you, especially those businessmen in the Greater Bay Area, if they are interested to move their production plant to Mexico. So I think as a businessman, also as a CPA, we should always be a first mover. We should follow the trend, or sometimes we should act in front of the trend. I have been in business with Latin America for 15 years, and I would say this is my niche in Hong Kong. And because of, the the economic challenge we have right now in all over the world, especially in this year because of COVID, I see that the one platform that the Latin American people, including Mexico, can work closely with TDC in the future is what we call the e-commerce platform. And the Hong Kong Trade Development Council, in fact, has a very strong database. They have what we call a strong platform of connecting their suppliers, to the would-be purchasers. All right, so this is very important. So all you know about TDC, or all you want to do, if you want to do business in Mexico, please consult Hong Kong Trade Development Council. Now, if I want to put one or two more general remarks, I would say that Mexico is very close to America, close to USA, all right? So actually, Mexico has a free trade agreement definitely with the United States of America. And I'm sure that most of the productions, or most of the manufacturers, if they want to ship their manufacturing products, they want their ultimate destination, most of them would be in America. So, leveraging on the proximity of Mexico to America, I think there will be a great chance, for manufacturers to reduce the transportation costs, as well as to make use of the zero tariff between Mexico and United States. So for this, in details, I hope that all of you, if you're interested in Mexico, please consult Hong Kong Trade Development Council, as well as the Mexican Chamber of Commerce. Now, lastly, I would like to say that because Mexico is a very big country in itself, the people, they speak Spanish, and most of the people, they also speak English. It is a country with unlimited opportunities. And I think that because based on, the tension that we have right now all over the world, and the challenges that brought forth, by COVID-19, I think this is now the right time, really, I emphasize two words again, right time, right moment, for all of you to consider Mexico as another alternative for you, to invest, or, to bring, your production there. So that's all what I want as an introductory remarks. Now, before I pass to the speakers, I would now like to pass to our TDC colleague, Charlotte, and she will make a very brief introduction about the speakers. So, Charlotte.
And now, may I invite Ms. Charlotte to give a general overview of the Mexican market. Thank you.
Thank you, Joyce, and thank you, Thomas. I think TDC is very happy to share more statistics with all of you, and I hope I have included as much of details as I could in this presentation. If you want further information, you can also go to our research portal. So I will start my presentation right now. I think everyone is aware that COVID-19 has disrupted the global supply chain. And to gauge the impact of this disruption, many international organizations has done some forecasts. For example, the International Trade Center has estimated that Europe, US, and China has reduced billions of manufacturing imports from other countries. And this reduction is due to both supply and demand disruption. So this has provided new incentive for companies to recalibrate their supply chain, and also to provide new incentive. This has provided new incentive for both global government to reconsider their industry policy. As now supply security has more weight in companies' supply chain strategy. Supply chain strategy, we can foresee that the supply chain is likely to go more diversified, and to go regionalized, and also localized, in order to build a more resilient supply chain. In this sense, global brands and manufacturers, including many of those from Hong Kong, they are likely to eyes at Mexico, the largest manufacturing center in Latin America, in order to best serve for the American market. Indeed, Mexico previous slide can I go to? Indeed, Mexico has a globally competitive industrial capacity. Here you can see that the Competitive Industrial Index for 2020, and it is from the United Nations Industrial Development Organization. This index has taken account into a number of factors, including the country's capacity to produce and export, and also the company's technological deepening and upgrading, as well as the world impact. And you can see Mexico actually fared well in this index and was ranked as the 20th. And this is the highest among Latin American countries, and it is higher than many other Asian manufacturing hubs, such as Thailand in the 24th and Vietnam in the 38th. From this index, we can learn that Mexico has a very significant share in the world's manufacturing export landscape, especially in terms of the high-end and medium and high-end activities. In particular, Mexico is specialized in medium tech manufacturing export, mainly in the field of vehicles, electronics, and machinery. These three industries accounts for more than 60% of the country's total export in 2018. Also, in these three trades, Mexico is a very significant player in the world manufacturing landscape. It has a very strong manufacturing and export capacity that is ahead of many emerging market peers and just behind some of the leading exporters in advanced economy, such as United States, EU, Japan, and South Korea. For example, in terms of auto export, it is among emerging market economy, it exported the highest amount of auto. And also, another example will be industrial machinery. Among emerging market economy, it has the second highest export value, just behind mainland China. And one more example will be electronics. Among emerging market economies, Mexico was the fourth largest exporters, just behind mainland China, Malaysia, and Vietnam. Most importantly, Mexico's specialized trade are in complement with Hong Kong's and mainland China's manufacturing landscape. Electronics trade is one of the top items exported from mainland China and Hong Kong, and many of these electronics are used in the manufacture of automobile. In today's global supply chain landscape, many parts and components are manufactured in Asia and are routed through Hong Kong to their final processing and assembling center. This includes Mexico, the manufacturing center in Latin America, specialized in electronics, machinery, and automobile. And this is because many brands have set up processing and assembling centers in Mexico to better serve for the American market. Therefore, this makes perfect sense for Hong Kong manufacturers to choose Mexico to their list when they are considering their China +1, +2, or +3 strategy. Besides, through manufacturing in Mexico, not only can manufacturers gain access to Mexico's domestic market of 128 million population, manufacturers can also gain preferential access to some 50 economies. This includes many advanced economies that mainland China doesn't have free trade agreement with, such as the United States, Canada, EU, and Japan. And also, it will provide preferential access to many emerging markets that has a sizable Spanish-speaking population, such as Peru and Colombia. Currently, due to its close proximity to the largest consumer market in the world and the preferential access granted under the USMCA agreement, Mexican export is heavily tuned to the North American market, in particular to the United States. You can see some 80% of its exports were destined to the United States in 2018. Riding on the NAFTA and USMCA agreement, which replaced NAFTA since July this year, nearly all tariff and non-tariff barriers were removed for goods produced in North America within the three countries, and also significant investment barriers in Mexico were eliminated. Also, basic protection are provided for investors. This has attracted many global companies, especially for those in labor-intensive industry, such as automobile electronics, to invest in Mexico by setting up maquiladora. Many of these maquiladora has a U.S. parent company, and they import intermediate goods, and many are imports from other Asian countries, and then they further process all these imports in Mexico to final goods and for exporting back to the United States. Under the NAFTA and the USMCA, goods that contain non-NAFTA region, materials from non-NAFTA region can still be considered as North American goods if they have satisfied group of origin specified in the trade agreement. In many cases, this will require the goods to have undergone substantial transformation. In other words, a change in tariff classification. And also, they will have to meet a minimum level of North American content. And for the current and acting USMCA, it resolved the concern triggered by the US and Mexico trade dispute during the Trump administration. This new trade agreement retains most of the market opening measure and other measure stated in NAFTA, although it has made more stringent rules of origin for the auto export. Coupled with the trade liberalization efforts in Mexico, NAFTA and USMCA has created a vertical supply chain relationship between US and Mexico, especially along this US-Mexico border. This manufacturing model has attracted many companies to invest in Mexico. Last year, although there are uncertainty on the NAFTA agreement, Mexico was still the fourth highest FTA inflow countries among emerging market economies, just behind China, Brazil, and India. As mentioned before, many companies will consider setting up maquiladora along the US and Mexico border in order to reduce their transportation costs through road flight. This has created industry cluster in Mexico. For example, Tijuana City, it has a very strong industry cluster in aerospace and medical device. If Hong Kong company want to set up a factory, a maquiladora in Mexico, they should locate their industry cluster in Mexico before taking the trip to Mexico. Besides, the Mexican government has been actively providing export support and other industry support programs to support investors setting up factory in Mexico. Among all available export support programs, the most notable one is the amidst program. Under the amidst, companies can import inputs at a duty-free manner that imports goods at a duty-free manner temporarily, and also they will have the possibility to receive tax credit for VAT and the IEPS, provided that this input will be used to manufacture, process, and repair goods for subsequent export. Another notable program is the process program. For this program, Mexico offers SETA for this program. This is called SETA promotional program, and this program is designated for specific country, a specific industry. And under this process program, participating firm can import inputs and machinery at a preferential tariff. The most important is the final goods can be exported or can be used in the domestic market. For the two programs that I have just mentioned, manufacturer can actually be entitled to be enrolled in both programs. Besides, the incumbent AMLO administration also introduced a new tax incentive for business in border zone after his inauguration. Here in this map, the northern border zone are shown in the pink color, and some of the cities are named here. And this tax incentive is to lower the tax burden for business whose income come exclusively from these border zones. Besides, the IEPS tax on fuel is also cut in these border zones. This is very encouraging, as Mexico has a relatively higher fuel cost than the United States, partly due to the tax rate. As this program is slated to expire at the end of this year, the President AMLO has just extended this program for 4 more years. In other words, the program will be ended in 2024, and it is the year that AMLO is expected to be leaving office. This 4-year extension is providing higher policy certainty for manufacturers interested in setting up factories in Mexico. And also, this benefit is extended to the northern border zone since 1st June 2021. Another important consideration for setting up new factory is the labor issues. In Mexico, the labor cost is quite stable. Among all emerging market G20 economies, Mexico is the only country that has a flattened real wage curve. While, in contrast, mainland China has its real wage double in the last decade. Most importantly, after years of wage growth difference between the two countries, Mexico now has a lower average real wage than mainland China in general. In Mexico, the government has deflated minimum wages every year. However, manufacturers in Maquiladora will usually need to pay higher rates than the stipulated wages. For example, the real average wages for ordinary worker in the Maquiladora was 9,200 Mexican pesos, which is equal to $450 in 2020. I think many of you are concerned about how the COVID-19 has interrupted the Mexican's manufacturing landscape. So here come with a COVID-19 update. Mexico's COVID-19 outbreak is relatively less severe than other less populous countries in Latin America, such as Argentina and Colombia. However, there are second wave of infection emerging since December. Still, the COVID-19 has a very severe impact on Mexico's manufacturing landscape. Here you can see the manufacturing PMI has fallen since March this year, and it has been keeping below 50. Hong Kong manufacturer may want to gauge the reopening steps in Mexico. Here you can have a look on the 4-color traffic light monitoring system introduced by the federal government in June 2020. Although this traffic light doesn't directly translate it into some coercive measures in case of non-compliance. For example, some states, they openly claim that they will not obey entirely by these traffic lights declared by the federal government. Still, this system can provide some guidance to Hong Kong manufacturers for the reopening plan in different states. Last but not least, Hong Kong manufacturers should evaluate all risk factors and think ahead of these factors on how to manage. Think ahead on how to manage these risk factors and these challenges. For example, because of the long distance between Mexico, the Latin American, and Hong Kong, there are no direct flights currently between the two countries, between Hong Kong and Mexico. So Hong Kong manufacturers may consider flying through the United States to Mexico. Many of them may transit through Los Angeles, or they can fly from Hong Kong to Beijing for a non-stop flight to Tijuana in Mexico. Besides, as the biggest Spanish-speaking country in the world, most people on the street, they only speak Spanish. And although the business proficiency may be higher among business community, Hong Kong manufacturers should still consider appointing a very reliable interpreter to accompany them during the business meeting. Also, although the Mexican government has taken very significant steps in combating crime and violence in Mexico, these issues remain the most urgent issues for business people in Mexico. To reduce the risk, Hong Kong manufacturers may consider appoint a very reliable local agent and consultant to arrange their transportation and accompany them during the trip. Last but not least, every coin has two sides. Although NAFTA has facilitated Mexican trade with North America, its high dependence on the North American economy may also pose very high concentrated risk, as the COVID-19 started to weigh some pressure on the United States economy. That's all for my presentation, and I hope I have covered as much as you are interested in Mexico's manufacturing landscape. And thank you.
Now, may I invite Ms. Susana to present? Susana, please.
Thank you very much. Thank you, Charlotte, for such a complete presentation. I think I don't have much more to say now. Yeah, no. Anyway, thank you very much for Hong Kong TDC's invitation today. I'm very happy to be here with you and also with my very good friend Thomas Wong and his team. Yeah, as Charlotte and Thomas already mentioned, Mexico is positioning as one of the main destinations for investment in the coming years. And this was forced by Trump's China-US trade war, but also by the current COVID situation that has challenged what we used to think as value chain strategies. And so business people now are thinking of new strategies, China plus one plus two plus three, as Charlotte mentioned, or also finding how to create more resilient value chains. In this case, can I change it? Okay, so Mexico, as just Charlotte mentioned, Mexico is the 15th economy in the world, according to IMF estimates 2019. Well, maybe the numbers will change this year because of COVID pandemic. But still, Mexico is a free market with 1.2 trillion US dollars, consisting of highly diversified industries and also a significant amount of private investment. Foreign trade accounts for a large share of the economy. Mexico's trade ranks 12 among the world economies, both in exports and imports, with a total merchandise trade of 916 billion for 2019, a little bit less than Hong Kong. So, yeah. So Mexico has 13 free trade agreements with 46 countries, including, of course, most of the largest economies in the world: USA, Canada, the European Union, and Japan. Also with the Pacific Alliance, Colombia, Peru, and Chile. And also we have investment protection agreements, 32 investment protection agreements, and 9 economic partnership agreements with most of the countries in Latin America. So this of course helps Mexico have access to preferential access to very different markets, and many markets that China or Asian economies do not have currently this preferential access. This slide is a little bit crowded, but it's important to show that on one side we have exports, and on the other side we have imports. That Mexico's main trade partners, of course, are the U.S. and countries with FTA, with free trade agreements, mainly, of course, the USMCA region, Canada and the U.S., but also the European Union and the countries that are part of the CPTPP. In the case of exports, Mexico has a trade of 7 billion with China, but also with Hong Kong and 1.1 billion. While for imports, we can see also the same trade. Main trade is with FTA partners, USMCA being the main source of imports. But in this case, China also takes a big share of the second largest import source for Mexico. And also Hong Kong is an important partner. You can see this data is from China's point of view. This means that China's statistics. We can see that the trade between Mexico and China has been growing, but we see that a little difference of the numbers. This is mainly because Chinese exports arrive to Mexico not only directly but also through Hong Kong or through the U.S. So this is why we have this difference with the numbers previously shown. But here we can see China exports mostly products intra-trade firms, which means Foxconn China sells products to Foxconn Mexico, or Huawei China sells products to Foxconn Mexico. We go to the next one. Yeah, we can see here exactly the trend, which is mostly, as Charlotte mentioned already, electronic integrated circuits, devices for production of other products, electronic circuits, beer, home parts, and this is maybe the trade opportunities that we have from Mexico into China. As we mentioned, trade is also part, 70% of the imports of Mexico from China are also secondary goods and goods that are used for manufacturing for another process, for another products that will be exported to their market. And in this, compared with Latin America, we can see that main exports from Latin American countries to China are mostly raw materials and food, where in the case of Mexico, we can see that most of the exports are goods from being manufactured and become another good. So we can go to the next one. We can see here the trade between Hong Kong and Mexico. We can see also exports from Hong Kong to Mexico have been growing, but also imports from Mexico to Hong Kong have been growing in recent years. This is mainly because Mexico started exporting quite a few food products into Hong Kong in the recent years with the opening of the cargo flights of Cathay Pacific, but also because Mexican companies are finding that Hong Kong is a good market for the food, Mexican food products. We can also see that the numbers are different in the case of exports, Hong Kong exports into Mexico. This is because Hong Kong, in this case, it's counting the exports, which means products that are produced not only in Hong Kong, but also could be in mainland China or in ASEAN economies. But still, we see this trend. Hong Kong is working as a trade hub between Mexico and China, and between Mexico and different economies in Southeast Asia. If you go to the next one, please. Thank you. These are also the export opportunities for Mexican companies into Hong Kong. We see also a great trend of also parts, accessories, electronic integrated circuits, processing units, and all these parts are used for the manufacturing of another good, but also food. In this case, meat offal, fish, dried fish, avocados, which are the main products that Mexico exports to Hong Kong. Next one. Foreign investment, according to UNCTAD, most recent report, Mexico remained one of the main recipients of foreign direct investment. and also among emerging markets, but also 15 worldwide. We can see that Mexico foreign investment law provides non-discriminatory treatment to most foreign investors, eliminating performance requirements, and also liberalizing most of the criteria for automatic approval of foreign investment. Most sectors are open to 100% foreign ownership, and there are no limits on capital flows, and foreign exchange is determined by market rates, meaning that you can bring your money into Mexico, but also you can bring it back home without any restrictions. And currently we have an investment promotion agreement in force between China and mainland China and Mexico. And at the beginning of this year, there was the signing ceremony of the EPA between Mexico and Hong Kong. And we expect this EPA to be enforced once both parties have finished their internal procedures. Mexico also has double taxation agreements both with mainland China and Hong Kong, which set up like a really good environment for Chinese mainland companies moving into Hong Kong, or for Hong Kong companies interested in investing in Mexico. If we can go to the next one, please. These are statistics of Chinese investment in the past years. We see that there are more than 1,000 mainland companies in Mexico, over 200 Hong Kong companies also in Mexico. And these are the numbers of the cumulative investment in Mexico, meaning that mainland Chinese companies have invested 1.2 billion US dollars in Mexico, mostly in telecom, manufacturing, automotive, infrastructure, and energy sectors. For Hong Kong, we see almost 1 billion US dollars invested also in Mexico, mainly in logistics, in tourism, and also in manufacturing. Here are some examples. And we also have Taiwanese companies investing mostly in manufacturing sector in Mexico. Go to the next one. Here are some opportunities that we see in the chamber for Hong Kong companies in Mexico. Definitely Hong Kong, it's an important connector between China and Mexico. We see that because of the distance for many Mexican companies, they're not really aware of the opportunities in China, especially in recent years, with policy announcements such as the GBA policy and the dual circulation economic model that China is going to implement in the coming years, and also the Belt and Road Initiative. Definitely Hong Kong can play a key role translating this information into Mexican companies and helping them understand the opportunities that are opening in mainland. Also, we see that Hong Kong companies have more experience in infrastructure projects, in risk management, in digital Silk Road and health Silk Road. So we think that many Hong Kong companies can help mainland China companies to bring these infrastructure projects and using Hong Kong professional services. And by sector, we definitely, as we mentioned, we see a lot of opportunities for relocation of manufacturing companies into Mexico, not only with their technology, but also with their know-how and the capital. Exports of Mexico products to Hong Kong, and also through Hong Kong to Asia and to mainland China. E-commerce for China and Southeast Asia, using Hong Kong as a hub for e-commerce to these countries, and also in financial service. So definitely, we think that there are many opportunities for Hong Kong companies back in Mexico, and the other side of for Mexican companies into Hong Kong. And I would like to invite you all to contact Hong Kong TDC. As they mentioned, they have office in Mexico. Also to contact the MexCham Hong Kong. We have a lot of many of our associates are experts in Mexico in different areas, in legal, in accounting, so they can provide you real clear information or help you design a strategy to enter the Mexico market. We can also help you connect with the right people in Mexico, just like Hong Kong TDC can do that. And yeah, we can also help you understand all these incentives that are provided for Hong Kong companies into Mexico, and to design the best strategy for your business. So, well, thank you very much. Thank you.
Thank you, Ms. Susana. Now may I invite Ms. Luz to give the presentation. Ms. Luz, please.
Thank you very much. So today I'm going to talk about a specific case that we have handled in the firm. My name is Luz Martínez. I am a colleague of Mr. Thomas Wong at CWCPA. And I will do a brief presentation of a case that we handled lately. It's a case of a manufacturing company in Tijuana. So I'm going to share with you my presentation. And so, as I mentioned, we are part of a CWCPA. We're a public accounting firm in Hong Kong with several offices in mainland China. We have been working with the Latin American market. Mr. Wong has been working 15 years already, including, of course, Mexico in the last years. So today I will present this case of a manufacturing corporation in Tijuana. The company is from GBA, is from the Greater Bay Area. For special reasons, we are not allowed to disclose the name of the company, but we are going to talk about some key points that they will have to look and to have a lot of detail during the setup process and the corporation. So the current situation of the company is they move the operation in Mexico because of the demand of the suppliers that are actually in the U.S. and they also have some facility production in the border with Mexico and the U.S. And the objective of the company is to actually move the supply and move one of the process in Tijuana so they can have a better access to the market. They can have a quick response to the client and have a better process to export the products to the U.S. So this is the current situation of the company. They manufacture most of the electronical and the components in the U.S. in China. I'm sorry. They have a company in Mexico that is already settled. It's also an IMEX company that I will describe an IMEX company with more detail in a few minutes. So this is the client that they have. They have already some facilities in Tijuana, in the city we are actually Charlotte mentioned before, one of the cities in the border. And what they do is that the finished product is sent to the U.S. after it's assembled in the border. So what the IMEX programs have been discussed already by Charlotte and also by Susana. So it pretty much allows foreign manufacturers to import raw materials and components into Mexico, tax and duty free. So it means that they will have the goods. They must they must be in Mexico only for a certain period of time, and then they will have to be sent or shipped and export eventually. They are not allowed to stay in Mexico, but if they comply with that time, they can be exempt of paying taxes and it's duty free. So this program is suitable for companies that are focused on manufacturing. As Charlie mentioned before, Mexico is very suitable for this. Electronical, automobiles, and all these industries have been very successful in setting up in the country. So what the company is doing is to do one of the process of the manufacturing set up in Mexico. They will have one of the process move from China to Tijuana, and then eventually they will pass that product, that assembled product, to another IMEX company also that is based there, that is their main client. And then finally the product is going to be sent to the US. So actually one of the process will be replaced and be done in Mexico to comply with the IMEX requirements as well. So I'm going to give you a brief, I'm just quickly show the different clusters in Mexico for those that are interested on the different type of industries as set up. So we have Mexico City right in the center of the country. And all along the border, we have several cities that are very well established and they already have a cluster. So mainly in the center of the country, we have the automobile industry cluster. We have Toyota, Mazda, we have General Motors already there for many years. So that is mainly the center. We have Nagro, a cluster on the west coast, and we have a lot of manufacturing right across the border. So I'm going to show you a very brief case, very briefly a map. We have on the case that we are discussing, we're talking about a city, the company was set up in the city of Tijuana. They pick up this city that is right above the border. You can see this line on the Google Maps that shows the border between both countries. And there are different cities along the border that can actually are actually interesting for all these manufacturing places. So all around the border, I'm gonna make the map a little bit further. we have different cities that are related or that have already the cluster. We have Tijuana here. We have Mexicali that is very, very close. And the interesting part you can see is Tijuana, for example, from San Diego is actually very, very close. And then we have other cities also along the border that are also used for different manufacturing purposes. We have El Paso in Texas, very close uh, to the border, so as well. So we have different places, different cities that are all along the border, and they're used for the manufacturing. Also all along Reynosa as well. So you can follow basically the border, and you will see different locations on different clusters around the country. I'm gonna leave the link on the description on the PPT so you can see the map later. And this specific case pick up the city of Tijuana, as I mentioned, because the major client that they have is already set up there, also with an IMEX facility. So they already are a company that do this transformation of products. So the main focus, of course, was to search and to know where is the client located, what is the client doing, and how close are you going to be from the client to do the transportation of the products to him, and how close is that client located to from the border. So this was a very easy pick for this case. But I mean, some other cases that probably the clients are located in other places, we need to see exactly which city is more suitable for them, which has the better facilities for their production and so on. So the next step was to set up or select the type of company or the structure that they have. In Mexico, we have several types of companies to select. Most of the companies actually pick to have a company that is limited by shares. So that's also feasible for the company. So we need to look into the shareholders, which company is investing in the setup of the company in Mexico. It could be a company from China, it could be a company of Hong Kong, or we can do also a three-party. We can do China and then invest through Hong Kong, do the setup process in Mexico. We also look into what is going to be the future of the capital flow and the taxes. How are they going to be paid? What are the special benefits for the companies if they choose a Hong Kong company through GBA? And of course, other points to look into, like the initial capital amount, what are going to be the shareholders and setting up the company, etc. So in the case that we select, that we are discussing, they select Sociedad de Responsabilidad Limitada de Capital Variable, which means it's a company limited by shares. So that's also accessible for foreign investors. And as Susana mentioned, the investment can be done by foreign companies, not needing a local partner. So the next step was the time, and that is something that we are very insistent with everybody that is going to do the setup process in Mexico. Time will be something that you really need to manage in advance. You really need to think ahead. So the setup process in Mexico is fast, but it's more of the planning and the documents that we need to pay attention. So we have different things or factors that affect our timing and the progress of the projects. The first one will be the time difference. So we have 14 hours difference with Mexico City and 16 hours difference with Tijuana. If in the daily work and progress, this is something that really affects the projects, that we need to discuss something or we need to move forward with signatures and signings, etc. This is something that we really need to look ahead. We have, of course, local holidays. We have government officials will also start working on holidays back in Mexico. And the main part, I will say, will be the documents and the legalization of formal documents. So we have several steps to do legalization of the documents in the process. For example, it's very common that, as Susana mentioned, we have some cases that go or select Hong Kong as the vehicle for the investment in Mexico. And we have several steps, and we do prefer to use Hong Kong as this vehicle since it will make the process of the monetarization of the holding company faster. So we have here a brief example of Hong Kong and Singapore. With Hong Kong, we have first to bring the documents to a notary public, we do an apostille in the High Court, and then we bring the certified to do a certified translation with authorized translation in Mexico. So it's a very relatively brief compared to other places. For example, in we have cases, we had cases before for Singapore where we need to do first a legalization with the Singapore Law Society, then for the Foreign Ministry of Singapore, then after with the Mexican Embassy, and then later the certified translation in Mexico. So although it just looks like one step more, we need to consider that each place has their own rules and each place will have its own timing. So in a place, for example, in the process of Singapore, we're talking about 2 months to be realistic with the timing to have all the documents done. So it is very important to look into time to do this process. In the case that I mentioned in this example, we of course pick up Hong Kong. And another point will be the rental and the facilities back in Mexico for the installation of the industrial space. Like in Hong Kong, like in mainland China, we have permits for use of the space or the land. So it's very common that the companies can rent the land and then build on it the facilities that they require. But it has come to our experience that in many cases, the companies go and rent or they see this space that is available close in the border, etc., that has commercial space use. And the commercial space use is not feasible to do an industrial space facility. So it tends to be confusing. That's why you need or it's required to have someone back in Mexico to back you up and really go and check with the public office to see the real use of the land. So you might have that issue. That's something that happens quite a lot. And on the other hand, of course, we have industrial parks that already have these permits and that are easy to work with them, but they already have a lot of the facilities ready to be used. And last but not least, I will just do the brief commercial here. For example, we are working at CWCPA. We are working also with a local CPA firm back in Mexico and a law firm, which will help us exactly to discuss this type of things that I mentioned, to go check on the land, to really liaise with the local government, they're more familiar with the connection and the expertise back in Mexico. There will be a communication point also for the language, as Charlotte mentioned before. Like most of the people will speak Spanish. Government officials are not expected to speak English, so you do need someone that goes in person and deal with the local authorities. And they will also help to coordinate with local service providers. For example, the shipping companies or I don't know, like resources or facilities, or you need to buy some more machinery or elements for the factory, etc. They will be there to help in that. To enter into contracts, to review the information on the legal contracts, if they comply with the law, if the other party complies, etc. And also, after the setup is done, of course, manage the human resources matters that are necessary. So that's basically all the presentation from my side. A lot of you I know that are going to have very specific questions on how to do a setup on a specific industry. So you're more than welcome to contact me. This is on my WeChat QR code, on my email. And of course, each one of the industries and each one of the cities on the border will have a different setup process, although it's very similar, but also other benefits that you need to look into case by case. So you're more than welcome to contact us. Thank you, everybody.
Thank you, Ms. Luz. Now, after hearing the insightful presentation from the speakers, let's move on to the Q&A sections. I've received several questions from the attendees. Like the first one is, do you have any comments or advice specifically for government companies that want to sell to Mexico? See if the speakers can provide some insights.
Yes, which means that it has specific regulations for companies either to import textiles into the country or to produce them and export to to sell in Mexico or to export to other markets. In this sense, there's if the country that the of origin of the textile products doesn't have a free trade agreement with Mexico, of course they will have to pay tariffs at the entry to Mexico and to the import during the importation process. But also there are other restrictions, including companies that import textile products must be registered within a specific registration, specific registry directory, which is called the textile sector directory, meaning that companies must provide all the proper information before they import the textile products. But also there is a list of minimum prices for textile products, so to avoid dumping and illegal importation of products. So companies that import certain products must make sure that the prices that they are declared in the invoices for importing the products are within this range of minimum prices set up by the Ministry of Treasury in Mexico.
Thank you. And Ms. Luz, do you have any?
No.
Okay, and let's move on to the next questions. And the speaker mentioned different manufacturing areas along the border. Is there any specifications for each city? Let's say, for example, electronics or textile industry in specific?
For the electronics, I will say the area that we mentioned, Tijuana, Mexicali, they're very famous for this manufacturing of electronics manufacturing cities. But of course, they're not the only ones. I think pretty much, I don't know if Susana agree with me, but most of the border have these facilities. But these cities are very famous because they already have this cluster around that it's not only it's not the only company doing this type of product. We have many companies that are the like big companies, and around them you will have all these second tier companies that are related to the industry. So if you have problem probably with one supplier or you need several suppliers for different products, it will be easy for you to find them. So we have Tijuana, we have Mexicali, Ciudad Juarez, several cities that are into this in this industry, and makes the process of the setup and the supply chain way easier for the company.
Thank you, Ms. Luz. And due to the time limit of this webinar, I will just ask the last question. The attendee asks, can you talk a little bit more about the Mexican culture, especially about the labor, for example, like the OT, overtime working, and how's the management style?
Well, I think there are differences because most of Hong Kong manufacturers have experience working in mainland China. They are used to the Chinese way of manufacturing, in the sense that most of them hire people from other cities that are or other regions that are coming to work into their factory. So the companies must provide maybe boarding, they must provide lunch or food, they must provide the wages set is different, also unions is different. In Mexico, we don't have this immigration of people coming from other cities into the manufacturing centers. There's just people living in the manufacturing centers. They're living there from all the year, and so you don't have you don't have this movement of immigrants coming and going every year. So therefore, the culture is a little bit different, in the sense that companies must only comply with what the labor law stipulates as minimum requirements for working, which means, of course, minimum wage, of course, holidays, of course, social security payments, which may be, I don't know, for a company, maybe around 30% no, of the salaries that you can consider as social security payments that you have to do. But and also there are companies are allowed to do, well, workers are allowed to set up their own unions, but it's mostly to make sure that the conditions and the contracts are fulfilled, rather than other type of requirements for companies.
may I ask some follow-up questions? It's like after we know more about the labor culture in Mexico, can we also learn a little bit more about like a cost of setting up a small manufacturing unit? For example, like a cost for leasing a land of 1,000 square meters, and is there some license or some hidden cost that we can let the attendees know to set up this manufacturing unit though in Mexico?
Well, I would say in that case that, well, Mexico, it's really clear when it comes about regulations for companies. The regulations apply the same for foreign and local companies. We also advise to have a proper advisory by a law firm or an accounting firm, because of course navigating Mexican law is very different from Hong Kong or from Chinese law. So it's important to get all these basic facts about investing in Mexico. Also, we have seen through the years that maybe if you want to start business in Mexico to export to the US markets, maybe it's not necessary that you set up a company in Mexico. Maybe you can start asking a manufacturing company in Mexico that already exports to the US and already complies with all these facilities, all these regulations to export to the US or Canada market, to manufacture OEM products for you to export to other markets. So yeah, definitely there are, we think the keys are first to get proper advisory. So you understand clearly the uses of the land, and you make sure that you're purchasing or you're renting land or entering an industrial park that has the proper permit licenses to operate. And also that you can comply with all the tax regulation, which is a little bit complicated with the labor regulation, and that you also, that in order to facilitate the startup of your company.
Thank you. Thank you, Ms. Susana. I guess our speakers has already answered more of the questions from the attendees. And this is, thank you for the speaker's presentation, and thank you attendees for your participation and your questions. That's the end of today's webinar, and you can fill out the questionnaire later to share us your feedback and comments. Thank you very much.
Thank you, everybody. Thank you.
Thank you very much.